Hello and welcome to the Banker's Tech Talk video series. We're filming on location at Level 39, a fintech accelerator in London. I'm Joy Macknight, Deputy and Technology Editor at The Banker, and I'm joined by Dario Scarcella, CEO and co-founder of Capexmove, a platform which allows enterprises to issue bonds on the Ethereum network. Dario, thanks so much for joining us today.
Yes.
So can you tell me why distributed ledger technology, or blockchain, is being applied to the debt capital markets?
Yes, sure. So in debt capital markets, there are a lot of inefficiencies. And all these inefficiencies are basically being paid then by the borrowers, by the issuers, because they have to pay a lot of fees to all the intermediaries that are present in the debt issuance process. But now with blockchain technology, we can finally replace some of these intermediaries or allow them actually to use this technology in order to increase the efficiencies internally so that these issuers will not have to pay this huge amount of fees that are currently paying.
Okay, but what are the benefits to a more decentralized model?
Okay, the benefits I would say are security, transparency, and both at a lower cost actually. Because if you have a decentralized debt capital market where each debt is represented by a smart contract deployed on the blockchain, all the interested parties can actually see it. They trust the blockchain because it's very safe. And if the smart contract can also behave as a custodian, for example, in case it has to keep the collateral in escrow, collateral represented by crypto assets, then in this case we would benefit even more by a decentralized debt capital market.
Okay. So what problems do companies come up against when they want to raise funds, let's say to expand their business, but they don't want to liquidate their cryptocurrency assets?
Yes, in this case, so companies wouldn't want to liquidate their crypto assets, in this case cryptocurrencies, because they believe that the value of these cryptocurrencies will actually increase in the future. So it would be a pity if they had to sell them today to get some cash. So what companies like Capexmove provide are basically smart contracts where these crypto assets can be held in escrow in the contract, and then these companies can actually borrow fiat currency like dollars against their crypto assets.
Okay, and that obviously proves very important when you're dealing with initial coin offerings.
Exactly, definitely. And regarding the initial coin offerings, this is just, I believe, this period. But in the future, when also other types of assets will be tokenized, like real estate, for example, gold has been already tokenized, then also those type of crypto assets could be pledged as collateral. So it will not just be a matter of cryptocurrency, but also of all real assets that we now have.
So I know you're a part of the fourth cohort of the FCA's regulatory sandbox. What do you hope to get out of that?
We're actually looking forward to testing our product with the FCA because there are some areas that have not been looked at by the regulator very much in detail because it's so new. These areas are, for example, having a smart contract representing a loan agreement and holding collateral in escrow, or having the blockchain behaving as a clearinghouse when it comes to trading debt, because through our platform, the debt will also be tokenized and then traded in the secondary market.
Excellent. Thank you so much for your insights, Dario.
Thank you.